Good morning and welcome to Stock Market Today for Wednesday, May 8th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So let's dive right in now. Volatility persisting here in the marketplace. U.S. equities were lower in Tuesday's trading, extending Monday's losses. Late rally pushed the major indexes off session lows, but the S&P 500 did close lower for the fourth session of the past five. Tech, industrials, and healthcare were the worst performers. Utilities, energy, and consumer staples fared the best, though all sectors did finish lower on the day. Treasuries were stronger with the curve flattening. The dollar was firmer against the euro, but weaker on the yen cross. Gold finished up about 10 basis points. WTI crude got hit down about 1.5%. And as we get to the desk this morning, S&P futures are down 40 basis points after coming under pressure again yesterday. Asian markets were weaker overnight with China, Japan, and Hong Kong all down over 1% on the day. European markets are on the defensive as well. Treasuries are slightly stronger across the curve, extending that recent strength. Dollar is lagging again on the yen. Risk sensitive, risk off there. Yen tends to outperform. Dollar also slightly weaker versus the euro. Gold up 30 basis points. WTI crude off another 30 basis points. And as we look at the market here, volatility remains. S&P 500 holds above key support. We've identified 2850 as key support for the S&P 500. Below that, we have to start thinking around about 2800 and then the rising 200-day moving average at 2775. But for now, all eyes on 2850, that gap open from April 1st. What we are watching for now, as the market comes under pressure, is for the RSI to hold above 40. That, you've heard me talk about it. That would be our indication that momentum remains in bullish ranges and that this is just a pullback within the context of an uptrend that still has momentum behind it. So far, so good. But as I said, futures are under pressure today, so we're going to have to see how today plays out. Chaikin money flow remains bullish, starting to come in a bit, but still remains bullish. So the indicators are still okay. Markets holding above key support. So now we need to start to think about what happens. Should that level break? Should that level break, we need to start to get a little bit more defensive. But for now, let's stay the course. We've identified the key level. We have a game plan coming into each and every day. Follow your process. Know where you're getting out if you're wrong. These are the keys when the market starts to get volatile, right? Don't let emotion take over. Don't start trading off of the headlines. You have your key levels. You're watching them for your markets and your stocks. Now, your market in a minute. What am I talking about in the note today to Chaikin Analytics clients? Trade concerns continue to weigh. Stocks fall for a second consecutive day. I did not mean to rhyme that. S&P 500 holds above support at 2850. We've hit on that numerous times. Do have a possible false breakout in small caps as the IWM loses the 160 level. We'll take a look at that chart a little bit later in the show. Sentiment did move toward fear this week. CNN Fear Greed Index moved to a reading of 40. That is the fear level. That's down from the mid-60s last week. As volatility increases, we favor quality stocks. We'll take a look at an ETF that's a play on that theme. Futures point to a lower open here today, as I said. Taking a look at the power bars, as you would expect, some deterioration across the board. Major indices here that we track still all remain bullish, but much less so than they did yesterday and throughout most of this rally. Dow, 6 bulls, 5 bears, down 90 basis points yesterday. S&P 500, down about 70 basis points on the day, 131 bulls, 81 bears. NASDAQ bore the brunt of the selling yesterday, down nearly 2%. 18 bullish or very bullish stocks, 10 bearish or very bearish stocks. Small caps also underperformed. 572 bulls, 307 bears. Obviously, the flight to quality led to an uptick in bonds, sending yields lower. You know how I feel about where the 10-year yield is potentially going. According to the Chaikin Power Bar, small cap stocks and large cap stocks are still bullish. Stock of the day today, Reinsurance Group. RGA, the ticker symbol there, closed at 148.58, down a little over 1% on the day yesterday. Power gauge rating for Reinsurance Group is very bullish due to very attractive financial metrics, positive expert activity. Stock does have weak price volume activity, though, and earnings are kind of middle of the road. When we look at the major factors, 5 in each of these 4 categories, we come out with a very bullish rating. Strong trend, strong industry group type of name we want to consider, but you know the process. We are not getting involved here today. Why? Market and model are not in agreement. Dynamic duo not in gear here. We do have the very bullish rating, but stock is underperforming, and it's been an underperformer since February. Money flow neutral, above the trend line, kind of just a choppy consolidation here. Breakout traders probably have eyes on this 152.5 level. Stock is oversold, but just doesn't fit the process. And with volatility in place, it doesn't make sense to go against the grain here. We want very bullish and bullish stocks which are outperforming the market. Remember, when the market is under pressure, the names that are outperforming and that do well, even as the market sells off, are your likely leaders when the market does resume to the upside. Not the case here for RGA. We're going to stay away from this one here today. Obviously, we'll keep an eye on it, but no real need to do anything here today. Looking at our sector tracker now, movement of the major sectors over the last 5 days, all are red to varying degrees. Healthcare, REITs, utilities, and staples. There's your defense at the top of the list, though all, as I said, are lower over the past 5 days. Comms, discretionary, financials are middle of the road. And the groups that are kind of most exposed to the trade tension headlines, industrials, tech, energy, and materials, are the underperformers. Materials and energy in particular are 2 areas of the market that we have been avoiding. Originally, strengthening dollar and the impact that that has on commodities. Strengthening dollar negative for commodities, obviously a negative for commodity lever equities. Now throw in potential trade tensions, and just hard to get excited about materials or energy at this stage of the game. Our industry in focus, another area that's tough to get excited about, biotech services. Over the past 6 months, it has outperformed by about 3.1%. However, power bar ratio, which measures future potential, is very weak. 46 bearish or very bearish stocks, 6 bullish or very bullish stocks, currently ranked number 20 of the 21 subsectors that we track. Indicative stocks in the group: Mirati Therapeutics, MRTX, Immunomedics, IMMU, and Intercept Pharmaceuticals, ICPT, all with very bearish ratings. Now, you've heard me say it before. For those of you who are new to the show, when you're looking at these biotechs, especially the smaller cap biotechs, you have to keep in mind that these are pre-revenue companies in a lot of instances, or low-revenue companies. They're testing drugs. They have drugs in the clinic for potential approval. Those are catalysts that could really move stocks 30, 40% in a day in either direction. So if you're trading these stocks, the individual stocks, it's important to really have a solid understanding of what's coming down the pipeline, what potential catalysts are forthcoming in the next couple of months that could really move the stocks hard one direction or the other. Just an extra piece of diligence that you need to do if you're going to trade these individual biotech names. But let's take a look at one here today, Intercept. And now, note that they are set to report earnings this morning before the open. But Intercept has a very bearish rating, weak trend, weak industry group. Market and model are in agreement here. That very bearish rating is joined by a stock that is underperforming relative to the SPY. Overbought, oversold indicator getting closer to overbought conditions, while money flow has been pretty negative throughout this year. Now, we do see a consolidation here with support right at around the $85 level where the stock closed yesterday. Obviously going to want to watch earnings and see how this stock plays out. I think a break below 85 sets the stage for a solid move lower. Can kind of jump on the momentum bandwagon in that case. But obviously, we're not going to play this one in front of earnings because earnings are this morning. But I'm using it as kind of an example of how you would kind of set up your process. Either way, not the type of stock that we want to own here, as it doesn't meet the criteria for our process. Running through it for educational purposes here this morning. Key line in the sand at $85. Closed there yesterday. If earnings gap it through that level, you can kind of see the range has been 85 to 120. So that's a 35-point move. You could project downside on a break to about the $50 level. Trending names now. Let's look at S&P 500 gainers and losers yesterday. Despite the macro headlines and the trade headlines that are driving the market, we still are in earnings season, and that's what's driving a lot of the individual names here. AIG up by over 6.75% following their earnings announcement. Henry Sheen, one of the stronger names in healthcare, up nearly 5.5%. RE, 3.8% following their earnings. FMC, nearly 3% on earnings. Newmont didn't see any real news on that name to drive it higher by over 2.5% yesterday. On the downside, Mylan's earnings send the stock down nearly 24%. Saw it caught a downgrade as well today. Mosaic, MOS, down nearly 8% following their earnings announcement. Regeneron earnings take the stock down 6.34%. KLA-Tencor, important name in the semiconductor supply chain, major equipment company, down 6% following their earnings. We've been watching semis closely. You know that. PXD, down 5.32% following their earnings announcement. Speaking of earnings, let's look at Tuesday's surprises. Sprint missed by 2 cents. Doesn't see much going on there, though. Match beat by 16 cents. Stock trading higher here this morning. EA beat as well. Stock is trading higher. Regeneron, we talked about that one, missed by $1.49, and Sempra Energy beat by 23 cents. Today, before the market, MCK and CBRE are bullish names of interest. Neutral stocks, Cody and MPC. Okay. After the close, all eyes are going to be on Disney. Another key name in the healthcare space to watch, also neutral rated, is Perrigo. And then bearish stocks after the close, Albemarle, ALB, and Kraft Heinz, KHC. Chaikin suggests caution when holding bearish stocks ahead of earnings. So let's dive in now. Let's look at the charts. Let's talk about what the content of the note today. IWM, Russell 2000. Everybody's been watching this one because it hasn't joined the party, right? Q's, S&P 500, tested these highs from back in September. IWM, small caps, have been a major underperformer, have not been able to test the highs from last fall. We started to get some hope on Friday with a breakout through this key 160 level. Opened lower on Monday, but then closed back above that 160 level, had people thinking we could see some momentum to the upside. And then yesterday we broke down back below resistance. So the question is this a false breakout in small caps? Right now it looks like it's too early to tell, but it's something to look at. I see price-based support at around the $150 level. Moving averages, 50 and 200, come into play right at around the 154, 155 mark. What's interesting to me is momentum is trying to hold in bullish ranges. Above the $50 mark, we look at 40 as our downside border for bullish ranges for the RSI. But what's interesting is that on the push through, it wasn't able to become overbought. So momentum in the neutral area, kind of confirming what we're seeing in the price action. For me, I want to see a confirmed break above that resistance level before I get too excited that the small caps are going to make a run at their previous highs. Chaikin money flow is bullish, though less so than it was back in the February-March timeframe. Potential negative divergence there as well. Just given the volatility in the market, I am not in love with chasing risky small cap stocks at this stage of the game. Spike in the VIX as sentiment moves towards fear. VIX closed above 19, actually traded above 20 at one point yesterday as the market has sold off. So as you would expect, sentiment has moved towards fear with the market sell-off. Again, as I said, S&P 500 down 4 of the last 5 days. CNN Fear Greed Index moved towards fear, spike in the VIX. But what's interesting to me when we're thinking about the VIX is that when the VIX is above 19 and the S&P 500 is above a rising 200-day moving average, such as the current environment, S&P 500 actually does fairly well, up about 76% of the time over the next 6 months. So just something to keep in mind from a sentiment standpoint, especially if the market's able to hold key support at the 2850 level. I've given you the S&P here with the 200-day moving average. And then finally, quality is oversold as volatility is picking up. This is the iShares Edge MSCI Quality Factor ETF. Ticker symbol is QUAL. Has a bullish Chaikin Power Gauge ETF rating, and it's been outperforming the market since February. So the same analysis applies. Bullish ETF rating, outperforming the market. Market and model are in agreement. Dynamic duo in gear for this ETF. Currently oversold, bullish money flow above a rising long-term trend line and triggered an oversold buy signal here today. If you're looking to add names as the market volatility increases and the S&P 500 holds above 2850, I think looking at the holdings within QUAL makes a lot of sense. We want to own quality at this stage of the game. Look for support at $88 to hold to set the stage for a move higher here in the Quality Factor ETF. So that's going to wrap it up for today. Head over to ChaikinAnalytics.com/today. Sign up for that email. Follow along with this show. Get daily stock ideas in your inbox before the market opens. I will see you back here tomorrow. Have a great Wednesday, everyone.